There are so many good electric car stocks that you can put your money in right now. Some of them are a little bit overvalued or a lot overvalued, and some of them are actually undervalued. But it's kind of challenging to know which one to put your money into. There's a lot of different choices and who's going to be the winner, which stock's going to pay out the most money, who will succeed. Well, here I'm going to give you my take on the best electric car stocks to buy right now. Hello, my friends. Welcome to the Electric Viking. My name is Sam Evans. I'm coming to you here from Melbourne, Australia. Fantastic to have so many new subscribers come to the channel recently. Welcome to all of you to the channel. Awesome to have you. And welcome back to everyone else who's been here over the last, well, we've only been around for about 7 or 8 months now, but everyone who's been here longer than a month. Anyway, now, for those of you who don't know, we've made more than 700 videos about the industry, electric cars, what's happening in the industry over the past 6 months. Make sure you check some of those out because there's some interesting stuff there. I've done a lot of research, which has helped me to understand what's going on in the market much better than what I did before I started this channel 1 year ago. Now, recently, a lot of people have piled into some interesting electric car stocks. One of them, Nikola. A lot of people lost a lot of money on that stock. Why? Well, they didn't do their research. If you had, you would have known to steer way clear of that stock. I watched some YouTube videos of various people claiming that, wow, I'm doing amazing on Nikola. I'm playing this game really smart. I know what I'm doing. Don't you worry. Yeah, I bet you did. I bet you lost probably 90% of the value of your investment as well. That was a bad decision, wasn't it? Now, other people recently have invested Lucid and Rivian, two companies in America that I do think are very promising and will succeed. But will they come to justify their current stock prices? Well, yeah, interesting story here. There was a recent article on Seeking Alpha. The author claimed to be an expert on the electric car industry, and they said that they had invested 50% of their net worth into Lucid. Because, well, so many good reasons, and none of them were all that logical, to be honest. Most of them were emotional, speculative reasons. Since they invested that, since that article came out, well, Lucid's share price has gone down by about 30%. So they've lost a very large percentage of their net worth so far. Now, it may change. That valuation may increase and maybe they'll actually double their money eventually. But Lucid and Rivian are not two stocks I would invest in right now, simply because I believe there's too much hype and emotion around that investment. Those companies are definitely not worth their current valuation, even based on their 5-year plans. Even their 10-year plans wouldn't justify that valuation, especially in the case of Rivian. Lucid, we don't know. But that said, neither of those companies have really produced enough vehicles to come close to having any real idea of what their futures will be. Don't get me wrong, I do like those companies, absolutely. I mean, honestly, if they said to me, would you like to test one of our electric cars? I would say, hell yeah. I love your electric cars. They're fantastic. So it's not me knocking those companies. But the companies I would invest in are companies with proven track records. Who do they include? BYD, NIO, and a few others. I'll get to those in a second. Now, BYD, as you know, I've made many videos about them. A recent video I made was what they've done over the past year. How they have transformed into an electric car company and into one of the biggest battery companies on the planet. BYD are next level, and their share price, in my view, based on what they've done this year and what they plan to do in future, their plans and their ability to deliver on those plans, say that BYD is significantly undervalued right now. Now, in the video that I made, I showed you how BYD's battery deployment has tripled this year, tripled in the space of 1 year. They make their own batteries, by the way. They make almost everything that goes into the car. I'll put a link in the description below to a video I made about 15 facts you need to know about BYD. Make sure you check out. Now, right now, BYD controls the highest share of China's electric vehicle market at around 20%. The company derives more than half of its revenue from auto and related products. In November, BYD delivered 97,242 vehicles. Of that, 90,000 were EVs, including plug-in hybrids, which were about half of that number. Moreover, 46,000 units were fully electric, made in-house, all in-house, not built by other companies. Batteries aren't built by other companies. BYD does all of it. Now, this traditional automaker has clearly shifted to EVs within the past 12 months. Incredible transformation. Apart from vehicles, BYD derives roughly 40% of its revenue from mobile handset components and roughly 8% from rechargeable batteries and solar products. The company is witnessing very strong growth in the EV segment, which could form an increasingly higher proportion of the company's revenue mix. Now, they've increased their electric car sales by 10,000 every month for 6 straight months in a row, and that is absolutely staggering. BYD stock is trading at a price to sales ratio of around 3.6, with a long history of operations and a better price to sales multiple than many EV stocks in the market. Value-focused investors should find BYD stock attractive. Now, two of my other favorite stocks that I'm currently invested in alongside BYD are NIO and Xpeng. Now, I hold a lot more of one of these than the other. I'll tell you which in just a moment. Now, NIO and Xpeng have a few things in common. Both of them are pure play electric vehicle companies. And both of them started at nearly the same time, in 2014 and 2015 respectively. Now, both of these companies are currently giving Tesla pretty strong competition in China, and their perceived brand value in China with the Chinese consumers is extremely high. In fact, a lot of people think it's higher than what it is for Mercedes, BMW, and Audi in China. Now, of these two, NIO generates the highest revenue, but Xpeng has been growing at a faster rate than NIO lately. Even so, both companies are growing their revenue at an impressive quarterly year-over-year growth rate of more than 100%. And both of them plan on aggressively targeting the international car sales market, in particular the European market, where they're both going on sale right now. In fact, NIO is already on sale there, and Xpeng will be shortly. Now, do they face competition? Absolutely. They face strong competition from established players like Tesla, General Motors, Volkswagen, BYD, Audi, as well as potentially other players in the electric vehicle space. But both of these companies look very, very promising and have already sold tens of thousands of vehicles and are growing their sales very, very quickly. Plus, remember, they are both based in the world's largest car market, which is China, and by far the world's largest electric car market, which is in China. Very, very hard for Legacy Auto to get into China and start selling electric cars. Remember, for a Legacy Auto to sell their cars in China, it must be part of a JV, and those cars must be manufactured in China. It gives them a pretty significant handicap in terms of actually making money in the country. Now, all in all, NIO and Xpeng offer a very explicit way to invest into China's electric car market. However, there is a perceived small risk in investing in both these companies. They could be delisted from the New York Stock Exchange. Price could go down as a result of that. I personally don't think that will happen, but it is definitely a risk that you have to consider. Now, personally, I'm invested. 90% of the funds I have in these two companies is in Xpeng. Only 10% is in NIO. I've made a lot of different videos over the last couple of months about both these companies. And in those videos, I talk about the reasons why. I'll put some links in the description below to some of the videos I've made about Xpeng and what they're doing and why I think they are a very promising company. One of those is the vehicle they're manufacturing called the P5, which is a direct competitor to the Toyota Camry. But even though it's a similar price to the Toyota Camry, it is seriously miles better. And that car is going to be a game changer for Xpeng. Now, the final company here that I recommend investing in is General Motors. No, just kidding. Jokes. Hey, you can invest in General Motors. You never know. They could do well, but I'm not invested in GM and I don't plan to be. Actually, no, I do own $9 of stock in General Motors. I purchased $10 of stock just as a game to play to see where that stock price would end up. I did the same for Lucid and Rivian. All three of those companies that I've lost money on, but fortunately only a few dollars. Now, Tesla. I'm very heavily invested in Tesla. 50% of my portfolio is invested into Tesla. Now, nearly 25% of Tesla's revenue for the first 9 months of 2021 came from China. In the third quarter, it derived nearly 23% of its revenue in the world's largest car market. Now, China is transforming very rapidly into a purely electric car market. Why do I say that? Well, in the year 2020, only 5% of all cars sold in China were purely electric. But in November, that figure was 20%. That's a quadrupling. That is insane. Disruption will happen at an incredible rate. Now remember, when buyers can choose between an electric car and an ICE car for the same price, what do they usually do? Well, that's the current situation buyers are in right now in China. And that is why the electric car market is growing at a staggering rate when legacy auto sales are declining at an equally staggering rate. Now, according to Clean Technica, Tesla controls roughly 10% share, the third highest of China's electric vehicle market. China is an incredibly important market for the company. A major chunk of cars produced at its Shanghai plant are exported globally. With a local manufacturing base, Tesla would surely like to expand its sales in China in the future. Thus, an investment in Tesla automatically pivots you to China's EV market growth. Now remember, by manufacturing cars in China, you get to manufacture them at a lower cost than you can anywhere else in the world. That is a fact that is not going to change within the next 20 years. That is just something we have to accept. If you manufacture your cars in China, not only are they, a better quality than those manufactured by Tesla in America, that's just an accepted fact, but they are cheaper to manufacture. Remember, CATL is setting up a battery factory right next to Tesla's factory in China, which will produce 80 gigawatt hours of batteries per year. CATL, by the way, manufactures lithium iron phosphate batteries at a lower cost than anyone else on the market. That battery chemistry is the chemistry of the future. Now, currently, Tesla has battery supply contracts with 5 different companies, and they plan on making their own. I believe Tesla will be the world's largest manufacturer of vehicles, full stop, by 2030. And I made a video about that. I made a video about my predictions for who will be the largest players in the industry globally in 2030. I'll put a link in the description below to that video. Now, the information in that video comes from, 1 year of me literally doing this every freaking day, reading everything about electric cars, reading everything, not just Tesla blogs, not just General Motors blogs, not just American-based ones, not just China-based ones, but everything I've been able to find. So I've done a pretty exhaustive research into these stocks, into the industry, and this is what I recommend to me. I don't recommend this to you. I recommend you watch this video, do your own research, and then make your best educated decision. And all the best on your investing journey. I'm sure you'll do well if you're planning on having the right mindset. And that is a growth mindset, an abundance mindset, and I'm sure you are. Most people who watch this channel are very positive people embracing a very positive future. Thanks for watching. I'll see you again on the next one. Bye-bye.